Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So far, 4 problems I have completed on variance, material variances and labor variances. In this video, 2 more problems I'm going to explain on this variances, that is labor variance. So one more video is required for completing the syllabus of this variance analysis. So all the problems are based on the formula. Without remembering the formula, you cannot proceed. And particularly variance analysis a little bit tough from a student's point of view. So you have to put some extra effort, some patience. Twice, thrice you should watch the video again and again. Then only you can be able to get the complete command. So before starting the 21st problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. Take the screenshot of the points which I have written, then I'll explain. See the 21st problem. Calculate the labor variances from the following data. So standard wages grade X and grade Y. That means 2 category of workers we have. Grade X workers and grade Y workers. So grade X workers, 90 workers are there at the rate of rupees 2 per hour. And grade Y, 60 workers are there at rupees 3 per hour. This is a standard composition of the 2 category of workers, grade X and grade Y. Similarly, actual wages are grade X 80 workers at 2.5 per hour and grade Y 70 workers at 2 rupees per hour. So we are given the standard composition and the actual composition. Now, budgeted hours 1000, actual hours 900. So actually all the workers according to budget standard 1000 hours should, that means the workers should work for 1000 hours according to standard. But actually the workers have worked only for 900 hours. Budgeted gross production 5000 units and standard loss 20%, actual loss 900 units. This problem is a little bit difficult problem because output is also given. Loss is given 20% loss. Whatever input you introduce, 20% will be normally lost. Like for example 5000 units. 5000 units, 20% means 1000. Out of 5000, 1000 units will be lost and 4000 will be the standard output according to standard. Whereas actual loss was only 900 units. Out of 5000 units introduced, 900 units are lost. So 4100 units is the actual output. So how to proceed in calculating the labor variances? See carefully. First column grade X and Y. 2 broad columns standard and actual. In standard we have 3 sub columns: standard time, standard rate, standard cost. Actual, again we have 3 columns: actual time, actual rate, actual cost. Right? Now standard time. Actually each worker has to work for 1000 hours. And how many workers are there given in the problem? According to standard, 90 workers and 60 workers. Every worker has to work for 1000 hours. So standard time, standard hours into standard workers. The standard hours are 1000 and the standard number of workers are 90 and 60. 90 and 60. So multiply 1000 into 90, 90,000. 1000 into 60, 60,000. So 90,000, 60,000 is the standard time. This standard time, 90, 60. Standard rate is given 2 and 3 rupees, 2 rupees, 3 rupees. Multiply 90,000 into 2, 1,80,000. 60,000 into 3, 1,80,000. Total 3,60,000. So we have completed the standard part. Now we have to start the actual. Actually, how many hours the workers have worked? 900 hours. Standard 1000. But actual are only 900. So actual time is equal to actual hours into actual number of workers. So actual hours are 900 and actual number of workers are 80 and 70 given in the problem. 80 and 70. Multiply, will get 72,000, 63,000. This is the actual time. So here 72,000, 63,000 actual time. Actual rate is given in the problem 2.5 and 2 rupees. 2.5 and 2. Multiply 72,000 into 2.5, 1,80,000. 63,000 into 2, 1,26,000. Take the total 3,06,000. The actual cost 3,06,000, whereas standard cost 3,60,000. The total actual time 1,35,000. Total standard time 1,50,000. Up to this part, it's clear. Now we'll come to the output. Standard output. Actually given in the problem, 20% of the input will be lost and only 80% will get. So how much is the input here? 5,000. So from 5,000, 20% will be lost. So 20% of 5,000, 1,000. So 5,000 minus 1,000, 4,000 units is the standard output. So if we introduce 5,000, we will get 4,000 output according to standard. Whereas actual loss is only 900 units. So out of 5,000 minus 900, 4,100 units is the actual output. This is the standard output, this is the actual output. Now, standard cost for standard output. The standard cost for standard output is 3,60,000. 3,60,000 is the standard cost for making a standard output of 4,000 units. 4,000 units. But we need standard cost for actual output. How much is the actual output here? 4,100. We cannot take this 3,60,000. This 3,60,000 is the standard cost for making 4,000 units. But we need the standard cost for making actual output of 4,100 units. So how to calculate? For 4,000 units of standard output, the standard cost is 3,60,000. For 4,100 units of actual output, how much is the standard cost? So 4,100 divided by 4,000 into 3,60,000. You will get 3,69,000. This 3,69,000 is the standard cost for making actual output. For making actual output of 4,100. And actual cost for actual output is 3,06,000. This is the actual cost for making actual output of 4,100. So we can compare the standard cost and actual cost when both the standard costs are same. Here directly we cannot compare because this is the standard cost for standard output. This is the actual cost for actual output. So we have to convert the standard cost for actual output here. Now it is comparable. Labor cost variance is equal to standard cost minus actual cost. The standard cost is 3,69,000, actual cost is 3,06,000. So 369 minus 306, 63,000 favorable. This is the labor cost variance. So this point is a little bit tough. You have to rewind it again and again, 2-3 times. If you watch, if you listen, definitely you can be able to get the point. If both the outputs are same, if there is no loss at all, directly we would have compared. We can compare this standard cost and actual cost if there is no loss at all. If both actual output and standard output both are same, then only we can compare the standard cost and actual. But here it is not like that. The outputs are different. The standard output is 4,000, actual output is 4,100. That's why we have to calculate what is the standard cost for actual output. That's it. So one variance we have completed LCV. Now easily we can calculate LRV, no complications. LRV, the formula is actual time into standard rate minus actual rate. Actual time into standard rate minus actual rate. Now X and Y. For X, what is the actual time here? 72,063. 7263. Standard rate 2 and 3. Actual rate 2.5 and 2. Now 2 minus 2.5 into 72,000, you'll get 36,000 adverse, negative. 3 minus 2 is 1, positive. 1 into 63,000, favorable. So minus 36,000 plus 63,000, you are getting 27,000 favorable. LRV 27,000 favorable. Two variances completed, LCV, LRV. Now labor efficiency variance, LEV. Now here you have to make some adjustment. The formula for LEV, standard rate into standard time for actual output. Here again, we cannot compare this standard time with actual time, because this standard time is for standard output of 4000 units, and this actual time is for actual output of 4100 units. The outputs are different. That's why directly we cannot take. We have to convert the standard time for actual output. We need the standard time for actual output. Keep a notebook ready and note down whatever points I am telling now. The standard time for actual output minus actual time. So how to calculate standard time for actual output? Actual output by standard output into standard time. X. What is the actual output here? 4100. What is the standard output? 4000. So 4100 divided by 4000 into standard time. What is the standard time of X? 90,000. So you will get 92,250. Similarly, Y, 4100 by 4000 into 60,000. Standard time. You will get 61,500. We got standard time for actual output. Now LEV, labor efficiency variance, X and Y. First we need standard rate. What is the standard rate? 2 and 3. Take 2 and 3. Then standard time for actual output, just now we have calculated 92,250, 61,500. Minus actual time. Actual time is 72,000, 63,000. Now 92,250 minus 72,000 into 2, 40,500 favorable, positive. 61,500 minus 63,000 into 3, you are getting negative. 4,500 negative. Negative means adverse. So 40,500 minus 4,500, you will get 36,000 favorable, positive. So we got LCV, LRV, LEV. Now we need LMV, labor mix variance. So labor mix variance formula, standard rate into revised standard time minus actual time. Already in the previous problem also we have applied this one. Revised standard time is equal to total of actual mix divided by total of standard mix into standard time, right? Total of actual mix का मतलब actual time. This actual time, 1,35,000 is the total of actual mix, and 1,50,000 is the total of standard mix, right? So 1,35,000 total of actual mix, 1,50,000 total of standard mix into standard time. Standard time is 90,000. So we got 81,000. This is the revised standard time. Similarly, 1,35,000 by 1,50,000 into 60,000, 54,000. This is the revised standard time. Now we substitute LMV, X. What is the standard rate? 2 and 3. So standard rate 2 and 3. Revised standard time 81,000, 54,000. Actual time 72, 63. Now 81,000 minus 72,000 into 2, 18,000 favorable. 54,000 minus 63,000 into 3, 27,000 adverse. So this plus 18,000 minus 27,000, you will get minus 9,000. So labor mix variance is adverse, 9,000. Now last variance is labor yield variance. The formula for labor yield variance is standard labor cost per unit of output into actual yield minus standard yield from actual input. Remember, first time we are applying the formula for LYV. So we require standard labor cost per unit of output. The formula for standard labor cost per unit of output is standard cost by standard output. What is the standard cost here? 3,60,000. How much is the standard output here? 4,000. So 3,60,000 divided by 4,000. You will get standard cost per unit of output. Standard labor cost per unit of output. 360 divided by 4, 90 rupees we got. Now standard yield from actual input. Standard yield from actual input. For a standard input of 1,50,000, see, by standard input of 1,50,000, we are getting an output of 4,000. We are getting an output of 4,000. For an actual input of 1,35,000, the actual input is 1,35,000. For 1,35,000 actual input, how much is the standard yield? So 1,35,000 divided by 150 into 4,000, 3,600 is the standard yield from actual input. Now we substitute Labor yield variance is equal to standard labor cost per unit 90 rupees into actual yield. Actual yield is 4,100. So 4,100 minus standard yield is 3,600. So 4,100 minus 3,600 into 90, 45,000 favorable. We got LYV. All the 5 variances we have completed. Labor cost variance, labor rate variance, labor efficiency variance, labor mix variance and labor yield variance. Now we want to verify whether our calculations are correct or not. We can verify ourselves. Now, how to make the verifications here? LCV. LCV is nothing but LRV plus LEV. LCV is equal to LRV plus LEV. How much is LRV here? 27,000 favorable. So I have taken 27,000 favorable. LEV, labor efficiency variance, 36,000 favorable. 36,000 favorable. Both are favorable. So add up 27,000 plus 36,000, 63,000 favorable. Now confirm whether we got 63,000 or not. Yes, LCV is 60,000, 63,000 favorable. Confirmed. Our calculations are correct till now. Now one more verification we can do. LEV, labor efficiency variance, is equal to labor mix variance plus labor yield variance. Mix and yield combined will get efficiency. Now we confirm. LMV, how much is LMV here? 9,000 adverse. And LYV, yield variance, 45,000 favorable. 45,000 favorable and 9,000 adverse. Adverse means minus. So 45,000 minus 9,000 will get 36,000 favorable. Now see whether efficiency variance is 36,000 favorable or not. Here, 36,000 favorable. LEV. We got 36,000 favorable. That means our calculations are perfectly correct. We are confirmed regarding all the 5 variances. That's all. So this is a little bit tough problem. I suggest you to watch the video twice, thrice, then only you can be able to understand this problem. So now, 22nd problem. From the following particulars, calculate labor variances. So standard hours means standard time, 200. Standard rate for actual production, 1 rupee per hour. Standard rate is given. Actual hours means actual time, 190. And actual rate, 1.25 per hour. It's a very easy problem. All the 4 items are given. Standard time, standard rate, actual time, actual rate. All the 4 items are given. Simply substitute the values in the formula. We'll get all the variances. See, standard time is given 200 hours and actual time is given 190 hours. Standard rate 1 rupee per hour. Actual rate 1.25 per hour. Now we substitute. LCV, labor cost variance, SC minus AC, standard cost minus actual cost. Standard cost is standard time into standard rate and actual cost is equal to actual time into actual rate. Now we substitute. Standard time is 200, standard rate is 1. Actual time is 190, actual rate is 1.25. So 200 into 1, 200, 190 into 1.25, 237.5. So 200 minus 237.5. So 37.5 adverse. Negative you are getting. So adverse. LCV completed. LRV, labor rate variance. Actual time into standard rate minus actual rate. Actual time into standard rate minus actual rate. Actual time is how much? 190. Standard rate 1. 1 minus 1.25. So 1 minus 1.25 into 190, you will get 47.5 adverse. Again negative. So we got adverse. Lastly, LEV, labor efficiency variance. Standard rate into standard time minus actual time. So standard rate is 1 rupee. Here, standard rate is 1 rupee. Standard time 200, actual time 190. So 200 minus 190, 10. 10 into 1, 10. 10 favorable because positive you are getting. So favorable. Now verify whether we have done correctly or not. Verification. LCV is equal to LRV plus LEV. How much is LRV? 47.5 adverse minus. Whereas LEV is 10 favorable. plus. So plus 10 minus 47.5, or on the calculator you do like this. Negative, A means adverse, negative. So minus 47.5, you press minus 47.5, and favorable means plus 10, you will get minus 37.5. What you got? Minus 37.5 means 37.5 adverse. See whether 37.5 is there or not. Yes, 37.5 adverse. Verified. Our calculations are correct. So totally 22 problems I have completed in this unit, CVP analysis and also standard costing. The next video, 2 more problems are left. Those 2 more problems we'll do it in the next video, inshallah. So if you're satisfied, give a like to the video, share my channel, subscribe, give your comments, and lastly buy the super thanks given below the video. Inshallah, we'll continue the next problem in the next video.